Hi, everybody. I'd like to welcome you all to our webinar today. I'm Sarah Payne, an M&A and capital markets partner based in Sullivan and Cromwell's Palo Alto office. And today we'll be discussing shareholder activism and trends we're seeing, particularly targeting tech companies. And we'll also be discussing ways in which companies may be able to protect against and prepare for a potential activist campaign. Today's environment poses complex issues for companies, whether it's addressing the current challenging economic environment, a greater focus on ESG and the many areas and issues falling under the ESG umbrella, as well as a broad group of constituencies in the current political environment. Before we get started, I'd like to first introduce our panelists for today's discussion. From Sullivan and Cromwell, I'm joined by my partner, John Savva, who's also an M&A and capital markets partner based in Palo Alto, and Melissa Sawyer, who heads up S&C's M&A group. We're really excited to be joined by Kelly Sullivan, who is a partner at the communications firm Joele. Kelly has deep expertise in advising clients on activist situations, as well as assisting clients on navigating other high-stakes communications matters. We're also joined by Scott Winter, Managing Director of proxy solicitation firm Innisfree. Scott is extremely active in advising companies on shareholder engagement, focusing on shareholder activism, M&A, and corporate governance. We're really excited to have Scott and Kelly with us today, given the perspective they bring from their advisory work with companies in this area, where communications and shareholder engagement are key. During our discussion today, I encourage everybody on the line to submit any questions that you may have for our panelists through the Q&A button that should appear at the bottom of your screen, and we'll try to get to as many questions as we can. Kelly, I'd like to start first with you this morning. In 2022, we've seen some high-profile shareholder activism activity in tech, whether it's Elliott's recent investments in Pinterest and PayPal, or Jana Partners' activity with Zendesk and New Relic. Do you think this is part of a broader trend regarding shareholder activism targeted at tech companies?
It does feel like that when you think about the fact that an activist needs to find an economic lever to be able to pull. The dislocation that we've seen in share prices across the sector makes it an interesting, creates opportunities for an activist to come in. And some of the other levers that we know activists like to pull around campaigns, many tech companies have in terms of governance standards that may not be as evolved as some older and more seasoned companies. So I think that's something that you've seen, and certainly Scott and I have seen as well quite a bit.
I think, particularly given the volatility right now in the stock markets and with the valuations we've seen in tech over the past several years, it does seem an area for those activists focused on stock price and volatility to be ripe. Scott, what are some of the trends that you've been seeing in shareholder activism in 2022?
So I guess to start, I think it's interesting. 2022 is just an extension of where we've been for the last decade. It's more of the same. The activists that go after companies are economic animals, and they're trying to make money for the people that they're investing money on behalf of. And that's what they've continued to do. I think there might have been a little bit of a pass in 2020 during COVID, where you saw fewer activist campaigns as companies were navigating through just how to keep their businesses running. But it picked back up in 2021 and extended into 2022, where we saw similar levels of activity to what we've seen kind of in most years, which is underperforming companies are vulnerable. And so from a trend perspective, I don't think there were massive changes. I think what is coming because of the universal ballot is going to be a really interesting shift as to how proxy fights and activism plays out over the next year. So we're in a universal ballot environment now. Those fights are just starting to come online, with more to come. And I think as we see how the activists navigate through the new rules, and I think we're all anticipating a lot more activity, those are the trends that are much more interesting. I think we're kind of in the world where past performance is not necessarily going to be reflective of what's going to happen over the next year or two, and then tactics will continue to evolve.
And I do want to come back in a little bit to universal proxy, because I expect that a number of our listeners today are very interested in what this group has to say. And as we talk to clients, it's certainly top of mind here. John, turning over to you, as you look at companies and advise them, what are some of the hallmark signs that a company may be susceptible to an activist approach?
Well, in the tech area, the high valuations that tech companies enjoyed for a long period of time, I think made many tech companies feel like they were insulated from a lot of the vulnerabilities that other companies have had. And I think the significant decline in valuations over the last 8 months or so have put tech companies in the same boat as many old economy companies, where levers like cost savings, capital return, a potential sale of the company are all things that activists are looking at. In 2021, we saw a number of campaigns across sectors that were focused on scuttling a transaction or enhancing a transaction. And in the tech area in 2022, we've seen campaigns focused on triggering a sale of the company with Anaplan, with Zendesk, which started off as opposition to an acquisition, turned into a campaign to sell the company. And I think going forward, capital allocation is likely to be an area of focus. There are a lot of tech companies that have been sitting on a lot of cash, and it's not just the very largest tech companies, but some of the smaller companies as well. In the past, they've had a plethora of investment opportunities, generating high returns, both organically and in terms of acquisitions. And as growth slows and companies may see a decline in those opportunities, I think that there may be more opportunities for activists to come in and look for value enhancement opportunities. I think there are a few things that tech companies are particularly vulnerable to, at least in some parts of the tech sector, that could create opportunities, such as supply chain issues that have plagued some hardware companies and some companies in the semiconductor sector. And then I think ESG type issues, particularly some of the ones that are common in the tech area, are levers for activists to gain board representation. That can range from things like cybersecurity, the impact of social networks, consumer privacy, and the like. And some of the campaigns that we saw back in 2020 involving companies like Facebook and Twitter, may be levers that could be more actively deployed going forward.
And just touching a bit on ESG for a minute here, or for more than a minute, Kelly, what are you seeing on the area of ESG, and whether it's ESG or anti-ESG activism, and how are you talking to companies about these types of issues?
No activist, with very small exception, I guess, most activists do not engage in activity solely because they're worried about the environmental policy or the governance standards or anything at a company, right? They're not the avengers of ESG. They're a lever they can pull to get support from voters. So the first premise for an activist is almost always whether or not there's an economic opportunity that they see to generate returns. And then they use ESG points as a means to to meet that objective and to be successful in their campaign. So one of the things we've all been watching carefully is the quickly changing tide around ESG. So it went from, all ESG all the time to, just this last week, seeing our first quote unquote anti-ESG activist and pushing Chevron to be pumping more, not less, being less thoughtful about future energy, not more. And I think we're also all watching a changing political environment in Washington and in some of the states, in particular Texas, where they're really pushing back on this idea of quote unquote woke capitalism. But I think from our perspective at Joele Frank, the ESG voter still stands. So while the broader environment may become more complicated, these issues are still issues that can either be used for or against a company when it comes to a contested situation and they're trying to garner support from their shareholders. So we're still encouraging companies to take it seriously and to be thoughtful about it.
And Scott, from your vantage point as you're advising companies in the face of a campaign or a concern about a campaign, how are you working with companies on these types of issues around ESG?
It's important because it goes to the culture and the way the company sees itself as a long-term player in, just within the economy generally and within the community that they participate, but it's not going to win or lose you proxy contests or dealing with activists because the activists are looking to make profit. So if you have a company that's on the far end of the spectrum where they're saving the world and getting rid of all carbon and coal, fossil-based fuels, but not making any money for shareholders, they're going to have a very frustrated shareholder base. So, the way I view ESG is it's important because it reflects on the company and a tone at the top, but it's similar to the way it's used with old style takeover defenses like a classified board and right to call special meeting. It's one of those bad governance, bad ESG that'll kill you in a proxy fight. But it's not going to win one for you. Mm-hmm. It's certainly a tool the activists will use against you, but only as part of a larger campaign where they've identified poor operations or poor capital allocations or some other poor strategy that when fixed will help catalyze the company to increase stock price.
And Scott, that's a good point on it's not going to win or lose a campaign in and of itself. Melissa, when you're working with companies, whether it's in their normal course annual proxies or their ESG reports, how do you counsel companies as to putting their best foot forward from a disclosure perspective with an eye to the activists that might be waiting in the wings?
I think it's really consistent with what Scott and Kelly were saying, which is that drafting perfect ESG disclosure is not a defense to activism, but failing to live up with the goals that you set for yourself in your ESG disclosures is a black mark that can attract activist criticisms. And we're seeing that a lot these days, unfortunately, in relation to climate transition plans in particular, as well as DEI goals and objectives that companies have set for themselves. Because failure to hit the mark on those objectives is an easy basis for an activist to say that the management team is not performing at the right level or that the board is not properly exercising its oversight function. And as soon as an activist has a hook to criticize the management team or the board, they can use that hook to build a campaign around replacing the board or replacing members of the management team. So what I would say to the people who spend a lot of their daytime working on really robust and excellent ESG disclosures, you're going to have to do that. The SEC is going to require some of it. And of course, it deserves a high level of focus. But that alone is not going to shield you from activism. And it's going to be really important to make sure that the messaging that you're giving investors, separate and beyond what's actually in your written sustainability report, is completely consistent with what you're writing down in those disclosures, and that you're having proper disclosure controls and procedures around making sure that what you write is accurate and that you can actually live up to the objectives that you're setting for yourself.
I love the way you set that up, Melissa, because I think the nature of activism is always, for me, that our truths on the company side are often complicated and the activist lies are often really simple, right? And from a communication standpoint, that's not a good place to be. And so, Sarah, when we come in and we start working with companies, and I'm working with a tech company right now that does not have, that I think is very vulnerable to activism from a performance standpoint. They don't have enough gender diversification on their board, and they spend a lot of time telling me like why that's the case, and their answers are very thoughtful, but they're just, once we are in the position of having to explain that, we've lost. So as you think about all the low-hanging fruit that you can clean up, you know, I always say, let's play the game. If we knew we were going to have an activist a year from now, what are all of the things we'd want to just be that much sharper? And, you know, again, performance issues are performance issues, business decisions are business decisions, but wouldn't we rather just not have to debate gender diversity in a public forum on our board? Let's just fix it. And I think that's the way to think about it, because once we're explaining and giving paragraphs on why we couldn't complete our climate goals or couldn't update, you know, we fell behind on DEI, we've lost. We're not talking about our strategy. We're not talking about our commitment to performance. We're not talking about the expertise of our board. And that's a really dangerous place to be in a contested situation.
As you, you know, Melissa, you made the point of, you know, you put these goals out there, you don't meet them, you're a prime target. How do you, when you're talking with companies, you know, there's that balance, right? You want to put goals out, you want to show that this is important, and we've got the specter, of course, of the SEC proposed rules and enhanced disclosure requirements. How are you working with companies to kind of decide, okay, do we put the goals out or do we say less because, you know, we can't be criticized of not meeting a goal we never had in the first place or didn't state publicly?
Well, I think on some of these topics, companies can't avoid saying something these days. And climate is a good example. The convergence of SEC rulemaking with investor expectations has created a situation where most companies have to say something about what they're doing on climate. So again, I think that it's a process internally of thoughtfully crafting goals that the management team actually thinks are achievable, and then structuring arrangements to incentivize people to achieve those goals if possible. But I also think another really important point about this is to have a relationship of trust between management and the board, so that if it looks like there is going to be a miss, there can be an immediate conversation about that and a discussion about how to communicate that properly with investors, and how to reframe the goals going forward so that they more realistically reflect what the company can achieve. So I think there's a little bit of managing expectations that needs to happen. But if there's discord in the boardroom or distrust between the board and the management team, it becomes difficult to have those kinds of conversations where management is incentivized to actually show up for the board and say, you know, these are the areas where we're underperforming. This is our plan to mitigate this issue. And instead, you know, that's where people tend to get caught out by activists because they've waited to wave the flag and say, hey, we've got a problem. And so one of the things we talk about is encouraging regular internal reporting in a way that doesn't make people feel like they have a target on their back every time they raise an issue, but that is constructive and focused on mitigation, providing support, and in some cases it requires providing additional investment. So allocating budget to ensure that management can actually achieve the goals that have been set for them.
One thing we've seen with the push on focus on greater board diversity, refreshment, we've seen a lot of turnover with respect to the composition of boards. Curious, and maybe I'll start with you, Kelly, your observations on this, and perhaps the answer is every company is different, but do you think this makes companies more susceptible to an activist attack, or have you seen examples where, the new perspectives that board members are bringing are really serving to improve a company's position?
You're never gonna get me to disagree with your last statement, which is diversity on a board. We see it for those of us who are in the boardroom. We've seen the data. It does improve thinking. It expands thinking, critical thinking, all the things that I think go to the quote unquote idea of being your own activist, come when you have a lot of independent and different perspectives on your board. So 100% we've seen that. I think to the other point I made earlier, you just don't want to be in the position of having the debate about diversity on your board when you're in an activist situation. And then a final point is, when I started doing activism, the activists made our job really easy, right? Because they put up just people who weren't that qualified, and they put up their buddies from the golf club, and they didn't put up people that you really had to have a thoughtful discussion about their qualifications. Now the activists are really, really good about not only putting forth quality candidates, but putting forth quality diverse candidates, putting forth quality gender diverse candidates, racially diverse and gender diverse candidates. So I think, if you don't beat them to the punch, they'll do it for you. And I'll just make a push, knowing the audience I'm talking to. I know that there's often a lot of frustration about finding qualified women with relevant tech experience to go on boards. Come my way. Like we meet a lot of people, we keep a lot of those lists. It's a passion of our firms. We would love to help place qualified women on boards.
I'll jump in. I agree with everything Kelly said, and continue, refreshing the board, keeping it diverse, and holding that management accountable is key to show that you have a board that serves as an appropriate counterweight to management is really the most important thing you can do in a proxy fight, which sometimes can be hard at tech companies that tend to often be younger companies and continue to be founder-led, where the board may be the same board that came up through the IPO and may still have some of the venture partners on the fund. Even after the venture investors have left, sometimes they stay on the board. But refreshing that board is important. The other thing that's really important, and this can sometimes run counter to the diversity goals but hopefully not, is these boards also need to have the skill sets, because what the activists are great at is finding undervalued, underperforming companies. And when they're underperforming, they're attacking either the operations or the failure to continue growth or poor capital allocation. And if you don't have experienced directors that are operators, successful operators in that space that can serve as the consigliere to the CEO, who does the CEO call with questions when margins are dropping or a competitor's go, if you don't have that experience on the board, I promise you the activists will nominate those people.
That's such a good point, Scott. And just one related thought, I'd be curious what the other panelists what your experience has been. But, this idea of diversity on the board, I think in this moment, especially as we move into universal proxy, where qualifications of individual board members will have greater prominence, we're working with some clients to expand how they define diversity on their board, right? So you can be a global company and proactively talk about one of the things you look for in the board, and the diversity you're looking for are people who have lived and worked in other countries, who speak multiple languages. I think a lightning rod in some industries, but in other industries where you're really rely on government contracts, I think highlighting that you're looking for people who have worked in different political administrations. So I think this is one place where, depending on your set of circumstances, instead of running from it or doing the bare minimum, you could really try and lean into it and think about how you define it and what you're looking for in terms of a mix on your board.
Completely agree, Kelly. We've seen that actually quite a bit in Silicon Valley recently in the tech area. And, you know, in many ways, Silicon Valley is a pretty small community, and you see the same people appearing on many, many boards. And, you know, some folks are in danger of being seriously overboarded. And the focus on diversity has led a lot of companies to look outside the Silicon Valley community more broadly for diverse candidates and candidates with different industry experience who can bring another perspective. So we've seen a lot more candidates joining boards from other areas of the country, other countries, other adjacent industries, rather than just the Silicon Valley community.
I love that.
And John, it seems that with this, you know, increase in change in board composition, it makes so much more important efforts to have board members get to know each other, you know, learn more about the company, and so that it really can act as a cohesive body, of course, with all sorts of different perspectives, but it can really be a productive boardroom.
Yeah, and that's particularly important as you bring in candidates who don't already know each other and haven't already worked together in one company or another for the past, you know, decade or two.
One thing is that was mentioned is the high quality nature of the candidates that some of these activists are bringing to the table. Melissa, you know, as you look at settlements that activists enter into with companies, I mean, do you see companies more willing to settle early when they see the types of individuals people are bringing to the table? Has some of that dynamic changed?
Yeah, I think that's right. There are a number of large, well-known activist funds who've been incredibly successful at sourcing terrific director candidates, people who have relevant C-suite experience in the industry, or who bring something to the table that is really additive to the board. And frankly, many of them are seasoned directors, so they understand how boards work and the relationship between directors and management. So a lot of the issues we saw in the earliest days of activism with fund managers going on boards are not in place when you have those independent candidates on boards. It's not universal though, and there are still quite a few smaller funds in particular who continue to insist that their fund managers be the designee to the board. And that introduces, in many cases, a very different and sometimes uncomfortable dynamic into the boardroom. We've all seen situations where you get a 32-year-old fund manager in a boardroom who has no particular experience in the industry, who is undoubtedly extremely intelligent and very good at financial engineering, but may not know the first thing about how to invest in a manufacturing plant or deal with labor issues or some of the other day-to-day kinds of things that a company may be facing. And I've certainly seen it where that person has a very narrow focus on achieving the activist thesis and will introduce that focus into every board discussion, even when that's not on the agenda and there are other important aspects of the board's business that need to be taken care of just to manage the day-to-day flow of board business. And so I think that can be really disruptive and often puts management in a very difficult position of trying to get direction from a board that is itself not aligned, and hearing discordant voices in meetings. I think that's why the rate of CEO turnover following an activist going on a board is extremely high. We've studied this for many years. And the CEO departure rate within 12 to 18 months after an activist designee joins a board is exceptionally high. I don't think all those CEOs are being kicked out. I think in many cases, they're just saying, you know what, life's too short and I'm going to move on and do something that makes me happier rather than dealing with this in my day job.
Although it is hard to know whether it's because the activist got on the board or because the activist was put on the board because the company was so deeply underperforming in the first place that the company felt like it had very little negotiating leverage at that point. And I mean, the truth is, while these activists, when they come on the board, they have a sense of urgency often that is very different than your typical director, and they try and put that sense of urgency on the rest of the board. They're trying to make things move faster. I think activism really rarely changes the ultimate outcome. It just gets companies to move faster. So if the CEO were going to leave, maybe they would have left in 3 years instead of 18 months, but the board would have gotten to that decision eventually anyway. Or if the company was going to get sold, maybe it gets sold faster or the division gets spun off quicker. But ultimately, boards are looking to do the right things. But having kind of an activist with its foot on the gas pedal makes everything move faster. And the activists generally can't do this stuff by themselves, right? All the other directors need to support it in the boardroom.
The other thing that I always tell clients who are considering settling with an activist and putting an activist on their board is don't assume that they're only going to be on your board for a year or two. This is another one of those data points that we've been studying for years now. And by far, in the majority of situations, when an activist goes on the board, they stay many years beyond the initial period that's contemplated by the settlement agreement that put them on the board to begin with. So if your settlement agreement says you have to nominate them again at your next annual meeting, you may be nominating them again for 4 or 5 years, because once they're on your board, it's very, very difficult to get them off, especially if the activist has a significant equity stake.
You know, one point that we've glossed over in our discussion today about the nominees is closing the loop on our earlier point that the quality of the nominees is going up. Sometimes they nominate someone or suggest someone you'd be happy to have. So that's always, and sometimes that takes the board a beat to actually look at it that way because of the conditions that come with it, because of all the other noise. But if you have an activist who's proposing someone who fits a skill set that's missing on the board, who, when you do the vetting, you know, has shown themselves to be a true independent, a thinker and an advocate independent of the activist in other board situations, you know, that's a really good place to start. So, you know, we don't come to this with an initial, we all make more money when a company goes to a fight, but, you know, that shouldn't be where a company assumes it has to be driving towards.
We often, I think, lose sight, Kelly, of the fact that in many areas there's actually a fundamental economic alignment, and you know, activists at the end of the day are looking to increase value, and that fundamental alignment often gets lost in the dynamic between boards and activists, but that can lead to them coming up with good ideas, good candidates, and they have resources that they can often bring to bear to help a company.
And that's where I don't know, John, how you feel, but as an advisor, Scott's point is the one that I just hate the most for my clients, which is that I've never seen an activist show up and suggest something that the board either didn't regularly review and dismiss or didn't regularly review and was preparing to act on. But as hard as it is for someone who only ever represents the companies, not the activists, to admit this, the one point the activists are right on is they do speed things up. So it just kills me when my clients have been working so hard, to get good attention for an effort underway, and then the activist comes in and gets all the credit. And it's the worst feeling for the company and for a friend and advisor.
Hey, Sarah, before we move off the topic of board composition, we did get a question in the Q&A, and I thought it was a really good question, and maybe John, this is a good one for you in particular, but the question was, how do we think about overboarding? And in particular, when directors serve on both public company boards and private company boards, which I think could be a particular issue in Silicon Valley because so many people come through the venture-backed pipeline into the IPO pipeline. Do you want to speak to that, John?
Sure. Yeah. No. Totally agree with I think the point that's behind the question, which is, there's often a focus on overboarding with folks counting public company boards, but private company boards can be extremely demanding. There's a history in Silicon Valley. When you look at director bios and S1s or proxies, you're sometimes, and people optionally list their private company boards. You're often amazed at the number of companies that on whose boards people serve, and that can't help but lead to a diversion of attention. I think folks have perceived it to be less of a problem when tech companies often didn't have very difficult problems to solve. But when companies are going through restructurings, reorganizations, cost cuttings, you're a Twitter dealing with very, very complicated, demanding dynamics, that diversion of attention can be a real issue. And I think there ought to be more attention paid to service on private company boards as well.
I want to now move to a topic that is, as I mentioned, is top of mind for virtually all of our clients, is universal proxy. And maybe Scott, I'll start with you in terms of how you're looking at advising companies, getting ready for this. What are the expectations for the upcoming season?
I think there's going to be a lot more activism potentially, but a lot fewer fights. So, and what I mean by that is I think, but I could be wrong, and we'll see how the market plays out. The market will judge ultimately. But from a proxy solicitor's perspective of who wins and who loses, what universal ballot does is it makes it easier for activists in a proxy fight to win 1 or 2 seats, but harder to win a lot of seats. And so, it also makes it harder for companies to completely shut out the activist. So if the bid ask last year was 5 seats versus 0, now maybe it's even if the activist has nominated 5 people, the realistic outcome might be somewhere between 1 and 3. If the bid ask is narrowed, you would think that there should be, once companies realize they're likely to get at least one of these activist candidates, they may be more open to settling and resolving it. But the counter to that is, if the activist knows they're going to win at least 1 seat and that's the floor, why not go for more? So I'm not sure how far this goes, but I think we're going to see a lot more activism. I don't think we'll see a lot more activism from the big guys like Elliott or Starboard. They're already super active, and so nothing stopped them. They'll continue to be really active. They'll probably change their tactics a little bit, but they're very creative and very smart, and will use the new rules however they think advantages them. I think we're going to see much more activists from some of the smaller guys. Activism makes proxy fights cheaper, or the universal ballot makes activism cheaper for activists that were more resistant to spending some money. And so now you used to be able to threaten, like, do you really want to do a proxy fight? You're really going to spend all this money, and maybe you'd get them to back off. It's not that much money anymore, so they may not back off. And I think that's going to lead to more settlements. on a preparedness standpoint, I don't know what companies can do other than keep performing, make sure you have good, strong directors with good skills and refresh your boards, and make sure that your shareholders understand and agree with your strategy. I mean, if they don't understand what you're trying to do and don't buy into that, that's when you have an issue.
Yeah, I think it's going to be really interesting too to see what kind of leverage this gives more of the special interest stakeholders. So if I'm the AFL-CIO, I'm building my universal proxy department to help my different member unions do their paperwork and their work there, so that you could actually see unions running candidates and proposing candidates. I think you could see the same thing from a climate standpoint. I could imagine if you're a pharma company vulnerable on something like insulin pricing, having some sort of patient advocate get attention. And it may not be that they garner enough votes or have the ability to execute and get themselves all the way onto the board, but companies should be thoughtful about the noise that would generate on those kind of issues. So we have started to talk to companies about being prepared for that dynamic, and to bring the whole conversation, I think, full circle from where we started, Sarah. I think this does go back to diversity. It does go back to thinking about diversity in a different way. If you know you're vulnerable on some of these more, for lack of a better description, social or special interest points, maybe you think about recruiting board members who could not only check some of the operational expertise that you're looking for, but have credibility on some of these other fronts.
One question that came through in the Q&A here is, how should companies be thinking about what they will need to do during the campaign and supporting the management slate? Do you expect that each individual director on the board, or some of them, may need to get more involved in meeting with institutional investors? How do you look at that right now?
The directors were already very involved, and they're going to have to continue to be. So I don't think you're going to, if you have a 12-person board, which would be very big for Silicon Valley, but if you had a 12-person board, I don't think you're going to be bringing all 12 directors around to all of your investors in the middle of a proxy fight, because but it could in unique situation. But for the most part, the activist is going to be nominating some smaller slate, and they're going to be targeting particular, even though it's universal ballot, they're still going to target, they're not required to, they're going to target particular directors they're trying to knock off the board. And look, let's be real, every board has at least one weak link or one weaker link on paper, especially when you don't know the people. And they're going to target those people, and ISS and Glass Lewis are looking for the activists to selectively target the people, and not that they necessarily need to agree. If ISS thinks someone else should be knocked off the board and not who the activists targeted, they certainly have that discretion to make that decision. But I think they are going to be looking for the activists to focus the shareholder base a little bit on who's up at stake, and then look for those targeted directors and those nominees. It is going to be important to bring those directors out and have them meet large investors. And you're also going to have to bring other board leadership. So if the activist isn't targeting your lead director, and your lead director is critical, usually is critical to setting strategy to the company, you're probably going to have to bring that lead director out as well, and maybe even one or two other directors.
I am a little worried. I don't know if this will happen, but I am a little worried that we'll see situations where a sitting CEO is targeted and doesn't end up with a board seat at the end of the proxy contest, or that we'll end up with boards where the audit chair doesn't get reelected, and then the company has to scramble just to do the day-to-day work of the audit committee, for example. So I think companies are going to have to keep an eye on that and make sure that their investors understand that they need to look at the board composition as a whole in view of the day-to-day work that the board does to make sure that they have the right resources on the board to complete things like the audit work, for example, where the activist candidate may not bring that skill set to the table.
It feels like universal proxy may be very much of a mixed bag, and it will also, I think, focus nominating committees on the weak links on the board, the folks who have been there forever, the former founder who no longer contributes and the like, who may be obvious vulnerabilities in terms of competing candidates.
Mm-hmm.
One question, and maybe Melissa, I'll turn this to you, that we received in the chat as companies look for towards the upcoming proxy season. Are you seeing people take a look at their current bylaws, the advance notice provisions, thinking about making changes there?
Yeah, I mean, look, one good thing about universal proxy from an issuer perspective is that it's providing a reason for a lot of companies to refresh their bylaws to make sure that they work for the time periods and the requirements of universal proxies. And as they're doing it, a lot of companies are also taking the opportunity to refresh their advance notice bylaws as well. There's lots of case law, particularly for Delaware corporations, that indicate that having really robust submission requirements for shareholders who choose to nominate directors is enforceable. And so companies, for example, can ask the proponent to provide a lot of information about what conflicts they may have relative to other shareholders. Is the director candidate going to receive compensation from the activist for standing as a candidate? Those kinds of questions seem to be fair game. So I think a lot of companies are looking at that. My one word of advice is I don't think this needs to be a cookie cutter exercise. So we don't need to take the list of 50 things that are available and insert all 50 of them into every company's bylaws. I also think it's really important that companies do this on a clear day. You don't want to be amending your advance notice bylaws in the middle of an activist situation, because then it looks extremely defensive.
That's good advice. I want to save some time here. We were talking about it just before we started this morning, and maybe Kelly, I'll ask you in the first instance. Companies, as we've seen very recently, are really struggling and to figure out in the current political environment, what types of issues do they take a stand on, and maybe the advice that was good 2 years ago is much different these days. Curious from your vantage point how you're seeing companies work through some of these hot button issues.
Sure, Sarah, thank you for the question, because it is something we're spending a lot of time on. I think add to the long list of things that 5 years ago I never would have predicted you'd hear me say is the statement that it's a really tough time to be the CEO of a publicly traded company right now. And I think we know a couple of things. We know that the workforce today is one that, like it or not, looks to understand in a different way than my generation the values of where they work, right? I'm a middle-class kid, and if my father today saw a world in which I cared about anything other than what I'm paid, what the insurance policy is, and whether or not I have had a 401k, he'd say, like, you're worried about the wrong thing, kids, right? But that's not the world we live in. The other extreme is the number of issues that CEOs are being called on to comment on is just overwhelming. So as is the case with a lot of things in life, you try and find the middle. And so the idea and the counsel we give is you can't stand for everything, but you also can't stand for nothing. So if you think about it, as we've worked with many companies who have come down to a framework that starts with, anything that impacts our business, you can count on us to be front and center on, right? I'm a media company. Freedom of speech goes to the core of who we are. We will always charge ahead. We will always be in it to win it when it comes to defending that principle. And companies articulate the next prong a little bit differently, but I think of it as being able to articulate in some way. You will always be there for your company, be there for your employees, and use your voice and your leverage to ensure their safety and support, both in the workplace and in their community, right? And for different companies, that means different things in terms of how far they'll go, but it gives them the ability to sometimes take a stand where they feel they can be helpful on some of the broader social issues. And I think one way in terms of how you decide what you're going to weigh in on is we work with a lot of companies to do the old-fashioned Venn diagram, which is plot on one axis, relevance to the business, plot on the other axis, relevance to your key stakeholders. And you really come up with that sweet spot, right? So I did this exercise with one of the nation's leading airlines, and it was clear that while issues that impact people who identify as gay or lesbian, not directly relevant to their business, they employ a group of employees who are disproportionately represented by that group, and it feels right to them that if those rights are compromised, that's an appropriate way for the company to use its voice. But if you are a media company and you have a group of employees who are incredibly passionate about climate change, you want to be able to show to them that you've done the exercise, you've been thoughtful about it, and it's an important issue, and you're glad that they care about it, but it's not a place for the company to be weighing in or taking a leadership role. And last point on this is I also think companies have been put in the position of only thinking that the way you weigh in is having the CEO make a statement. If you're a large tech company, you probably have a number of different affinity groups. Very appropriate for your affinity group to put something out, to have a statement on some of these things, to maybe have a post on social. Not everything has to bring with it the weight of the chairman or the CEO as a way to be thoughtful about these complicated issues. But I think the key is to figure out what you stand for in some version of the framework I discussed. Find a moment between, fresh hells in our country where you've got some peacetime and a little bit of a lane to articulate that. So you're not doing it, as we've talked about on some of these other matters, in the heat of battle, right? Everybody reads something different into it when you're doing it, when in an already high profile moment.
And one follow-up to that, and maybe Melissa or John, as you advise companies and think about who is making the decision from a governance perspective to speak out on something or not, and is it the CEO, is what's the role of the board, and in some of those discussions, how are you seeing companies work through that issue?
Well, I'll say a couple things on that, and then John, you should jump in too. I think that's a conversation that management and the board should have on a clear day ahead of time so that people know what amount of rope they have to go out and comment on things. These statements can have an enormous impact on a company's share price. We've seen stock rise and fall based on commentary from a CEO on social issues. And so the board certainly has an interest in what is being said, but at the same time, a lot of these statements need to be made relatively quickly and usually are not best drafted by a committee of 7 or 9 board members. And a lot of boards, I think, take the view that it is within the authority of their chief executive officer to comment on things on behalf of the company. But I do think it's important. I mean, in a way, it's sort of CYA for the CEO to make sure that there's that conversation ahead of time to understand if the board has a view that certain political topics are a no-go, or that the direction of travel for the company in terms of commenting on social and political topics should go in one way or another. I think that they should have that dialogue.
Totally agree, Melissa. And I think it's important to have the dialogue in advance. I think, there's not necessarily a one-size-fits-all way of dealing with communication around these topics, but the one size that fits no one is to have it happen on an unplanned sort of ad hoc basis that isn't thought through in advance. And many of these issues are fairly rapidly developing, and people are surprised at how quickly they can come up, but very few of them are so surprising that it's impossible to sit down and have a planned discussion about how to address them. Go through the type of exercise that Kelly was discussing in terms of what is the type of approach that fits that particular company, because that's not something that can be done on the spur of the moment.
One tip I just wanted to share on these topics is, again, you don't want to, especially as a leader, not empathy. Joele, our founding managing partner, she talks about the new definition of CEO is Chief Empathy Officer. And people hear different things and hear things not always accurately when you're not signing on to the climate pledge and you're a media company. So we've had some clients and CEOs and senior leaders who are choosing, especially at larger companies where you have the different affinity groups, to make themselves an honorary member for a year on a rotating basis for all of the different affinity groups. So it's a way of saying, we're not going to use company resources to make X social issue our number one priority, but I care that you care about it and I want to learn more about it. So, I'm going to join, I'm a male CEO, I'm going to join the women's group, so that I'm getting your perspective, I'm benefiting from your input. So I think there's just lots of ways to help people feel heard, which I think is a big part from an employee standpoint, what people want around some of these debates.
I think the key though is, and that's a great suggestion, because I think tech companies probably have more CEOs that are active on social and have personalities out there than companies in any other industry. The board needs to know what the CEO, is saying. And if they're not on board with it, they need to just get in alignment and rein it in. Because what you don't want to create is a situation where the activist shows up and says, see, you've got the CEO that's just mouthing off whatever they want to say and a board who can't control them.
And Scott, just as you work with companies preparing for the proxy season and communications, is social media and rules of the road and guidelines part of what you work through?
We probably should do more of it. And with respect to like general annual meeting hygiene, I think we're often getting pulled in when the activist is already there and you're more in triage and cleanup mode than prophylactically trying to not create problems.
I think probably what the big takeaway here is as much advanced planning and thinking through these issues on clear days when people are not in the throes of an immediate campaign. Well, I want to thank everybody, all of our panelists, for joining us today. It's been a really great conversation. Thank you to everybody who has listened in, and hope everybody has a great rest of the day.
Thanks so much for having us.